I think at some point in the not too distant future, we're going to be seeing massive gains in gold and silver, but how do you know when it's time to sell? What do you do when the prices go way, way up? There's no one right answer for everybody, but in this video, I'm going to tell you about how I'm thinking about this, what my plan is. I think that in the US, we're going to see some periods of very high inflation coming up. I think it's going to be something like the 1970s all over again, except this time the country is in much worse financial shape. So this time, I think it's more or less impossible to raise interest rates to the point where they would need to be raised to get inflation under control. And I don't think that the people in control are going to do that. I don't think they're going to have the willpower nor the support of the people to raise interest rates to where they need to be. So I think for that reason, inflation is going to get out of control in the US. Now, because of that, there's no telling how low the dollar can go. And when talking about gold and silver in terms of dollar prices, there's no limit to how high it can go. Let me give you an example. Like if you look at the gold price in terms of Argentinian pesos over the last 5 years, the gold price is up 14 and a half times. So what would the gold price look like if it went up 14 and a half times from here? That would be over $29,000 an ounce. That's already happened in Argentina. It's just they're using a different currency than us. So since there's no telling how low the dollar can go, the price in terms of dollars could be insane. It could be like $300,000 an ounce. That doesn't mean that the $300,000 would buy you what $300,000 would buy you today, probably not even close. However, when there's no limit to how low the dollar could go, there's no limit to how high the price of gold and silver can go. And I think it's very likely that at some point in the future, we're going to be talking about massive numbers. So we need a way to stay grounded because we have to remember that the dollar is just a floating abstraction. It keeps losing value. It's lost something like 99% of its value over the last 100 years. So how do you stay grounded and really know what the actual value of your gold and silver is? Well, you can compare it to some things that have a long history of comparison. For example, there's a piece of real estate that I really like right now that cost about 250 ounces of gold. I think at some point in the future, a piece of real estate like that one might be 50 ounces of gold or 25 ounces of gold or something like that. So when you can track the price of other assets, not in terms of dollars, but in terms of the number of ounces of gold it takes to buy that asset, you can have a pretty good idea of when the gold price is going higher versus those other assets. Something else I'm going to be looking at is the Dow Gold ratio. So you can look at this ratio going way back. For example, in the 1930s, the Dow Gold ratio got as low as about 2, meaning it took 2 ounces of gold to buy 1 unit of the Dow 30. In 1980, it got down to almost 1 ounce of gold bought the Dow. Will that happen again? Who knows? But it is a good mechanism to determine how valuable your metals are compared to other financial assets. So right now, the Dow is at about 37,000 and gold's a little over 2,000. So that puts the gold Dow ratio at about 18 ounces, meaning it takes 18 ounces of gold to buy 1 unit of the Dow. But when the price of these things that you own go way, way up, you're going to be feeling really smart and you're probably going to be thinking, I can't sell because what if it goes up even higher? And it will. It will go up more because nobody sells at the top. And you can't think that you're going to be smart enough to sell at the top either. So I think selling a little bit here and there is going to be a better plan for most people than trying to time the market and sell at the top and selling when we're at the peak of the mania, the peak of the bubble. But it's going to be hard to fight that urge, to fight that greed, like, no, I can't sell because the price has gone up like crazy and it's going to go up another $1,000 tomorrow if I sell today. You cannot be thinking like that. You have to be thinking, what's the value of this compared to other assets? Did I buy low and am I selling high? Is the value of this 1 ounce of gold pretty high relative to other assets right now? And if the answer is yes, well, then you can feel good about selling some of what you have. Now, I think before this is all over, we're going to get into a mania phase. We're going to get into some kind of bubble. And this is when it's going to be really, really hard psychologically for you to sell, because your friends and neighbors and family are going to be telling you about all the money they've made in gold and silver and how you should buy some too. And then you get an Uber and your Uber driver is going to be talking about gold and silver. And then you're going to turn on the news. There's going to be something about how much the gold price has gone up. And then it's going to go to commercial. And then you're going to see some advertisement trying to sell you an overpriced coin. You may even hear about people taking on debt to buy gold. Your favorite celebrity might start endorsing some company that's selling gold on TV. These are the kind of things that happen in a bubble. And people will say, this time is different. It's true that there will be things that are different about the world. However, all bubbles look pretty much the same. If you take a step back to see the forest through the trees, it's pretty easy to determine when it's a bubble. Now, some of you might have this idea that you're never going to sell your gold and silver. You're going to pass it down to your kids, and your kids are going to pass it down to their kids, and it's always going to stay in the family. I don't think there's a problem with that. Like, it's going to hold its value over time. However, if we get into a bubble phase, which I think we're going to get into at some point, you have to sell a bubble just because that 1 ounce of gold will buy so many other assets compared to what it buys today. So I think that if we get into a huge bubble, you'd be a fool not to sell some of what you have and exchange that for other assets that aren't so high in price. Just remember, the first rule of investing that you probably ever learned is buy low and sell high. When it comes to thinking about when to sell, I'm going to be looking at these ratios of how much gold does it take to buy real estate? How much gold does it take to buy the Dow? And maybe I sell my first tranche, my first portion of the metals when that ratio, when the Dow gold ratio gets to like 6, for example, instead of 18. Maybe at that point, I'll be looking at lightening my load a little bit. Now, I don't plan to sell it all at once, and I don't do that with stocks typically either. I think a better idea is, as you see that value of gold and silver increasing versus other assets, maybe you sell your first 20%. And then if the price goes up higher, you sell 20% of what's remaining. And then if it goes up even higher, 20% of what's remaining. Now, we're not selling 1/5 every time. You're not going to be out of gold after 5 sales, because each time you're only selling 20% of what's remaining. So you're never going to sell everything using this strategy, and you'll always have some of that left in your pockets. If you want to see more from me, please like the video and subscribe to the channel, because I'm releasing new videos on gold, silver, and mining stocks almost every day. Next, click on this playlist of other videos I've made recently that are going to make you a better mining stock investor.